All right. Well, welcome everybody. We're just going to give a minute or two for everybody to get logged on here, and then we'll begin our presentation. So just hang tight. We'll have the chat open as well, and we'll have time for questions at the end, but please feel free to chat anything at any time, and we'll get to your questions as we go. All right. Well, I think we can get started. Looks like we got most on, and if we have anybody else, they'll pop on as we go. So I'd like to begin our webinar today, Unlocking Construction Profits, Job Costing Essentials with QuickBooks. I gotta say, this is a topic that I get questions on constantly for the majority of contractors still, and not in a bad way, but they use QuickBooks. So they don't have all the pointers and what's going on with it. So today I am excited to be joined by Shannon Orpin with Emma Creek Bookkeeping, and she is the expert in the QuickBooks field. So Shannon, welcome. How are you today?
Thanks. I'm doing good. How are you?
Good. Just want to give us a quick little introduction about yourself.
Sure. I am a stay-at-home mom that gets to do bookkeeping for my job while I stay with my kids, and I love how it works with our family. I have been doing bookkeeping for probably 4 or 5 years. I don't even remember anymore. Started when my husband was self-employed, and he's really good with his hands doing construction, but wasn't good on the numbers side. And so I took over that. And it has morphed over the years into me taking clients, and we absolutely love it.
That's great. And one thing I really, when we found each other out there, and I saw your expertise, what I really like is that you come from that contracting background, and so it's not like I do bookkeeping for the entire world. You specialize and hone in on that specialty in contracting, which is what we're going to get to today in the wonderful misunderstood world of job costing. So again, I'm your host, John Kenny, CEO of Cotney Consulting. Those of you who don't know me, I spent 45 years as a roofing contractor before founding and starting my consulting business at Cotney Consulting. I work with roofers and other parts of the construction industry on multiple operational issues and training and software connections. So happy to be here and share our expertise. And we're going to jump right into our presentation. So what are we going to cover today? I'm just going to kind of give a quick overview. One of the reasons why we wanted to do this, like I said, statistics and data is my life. I like to keep up with what's going on. And I will tell you right now, 65 to 70% of the contractors that are out there, whether you're a home remodeler or roofer, it doesn't really matter, you're on QuickBooks. So this is without a doubt the most popular accounting software for the construction industry, from companies, startups, all the way up. I've worked with companies that are over the 20, $30 million range and using QuickBooks. So it's not something just meant for your checkbook at home. It really works well. So what we're going to cover is a little bit on the essentials of construction accounting, talk about leveraging QuickBooks for enhanced financial management. That's where Shannon's expertise is definitely coming in. Best accounting practices and cost allocation techniques, analyzing and improving profitability. Because let's face it, volume kills and profit thrills. That's what we're all here to do, is put profit into our construction companies. And we're going to spend some time on comprehensive reporting and financial decision making. And again, like I said, at the end, we'll have wide open for Q&A, but please feel free to use the chat at any time to put in there what you need. So we're going to start off with the best accounting practices for contractors. And I'm going to kick this over to Shannon. Give us a little bit about give us a little roundabout way. What is some of the best practices?
Stay on top of things. One of the hardest things that I find for contractors that I've talked to is that they struggle keeping up with the minutia of bookkeeping and the job costing that goes with it. And so honestly, you have to schedule time in order to be able to make sure that you're getting all this done. You have to Yeah, you have to take the time. You also have to make sure that you're aware of cost structure and how much your materials are costing, because that's going to come into how much you're making and what your profitability numbers are. And cash flow is a huge deal for construction, because most of the time your cost up front is pretty large. And especially if you're doing a percentage of completion contract with your clients, you're not getting money right away. And so you have to be super on top of your numbers to make sure that your business stays afloat.
Yes, cash is king, as everybody's heard that saying, but I always look at it as cash is the absolute lifeblood of your company. If you don't have the right cash flow projections and positive cash coming in, no matter how good you are in the field, in the trades, or whatever else you're doing, and your bookkeeping could be perfect, but if you don't have cash coming in, you will not live to see another day. That is for sure. So jumping in now, QuickBooks for contractors. That's what we're talking about. So kind of hit us a little bit with, what are some features that are beneficial for contractors, and then jump in a little bit of the integration of accounting with project management and other real-time tracking.
Yeah. So one of the reasons that I love QuickBooks Online for contractors is their job costing feature is amazing. And so you're making your estimates and your invoices, and they all go to that same job. When you are categorizing all of your income and your expenses, it's super easy to do one more drop down and click the job that it's all going to. QuickBooks has time, that's a different part of QuickBooks, and it is how your employees or your subcontractors clock in, and they can clock into a specific job, which is amazing that it's all integrated right there. QuickBooks is fabulous with their integration with other softwares, and not a lot of accounting systems do that. And so a lot of the people that I've talked to or worked with use something like Buildertrend or Procore. There's tons of them, and I'm not going to go through all of them, but sure. QuickBooks integrates really well with those. And so not only does your project management app work well, but then it also works well with your accounting system, and it goes back and forth both ways, which is awesome. Another huge reason that QuickBooks is good for contractors is it has receipt management, and you can do it mobilely. You can get the app, you can take pictures as soon as you purchase something and send it to QuickBooks, the app, and that way then it's all there, and you can categorize them later and send them to the correct transactions. The last reason, and maybe the most important, is QuickBooks reporting system is the best out there. There are a lot of accounting softwares, but you have to do your research, because a lot of them don't have a very good reporting system. And if you don't have a good reporting system, then your job costing, it's not going to do you any good. And the time that you spend on it is just not worth it.
Yeah, and I what you're saying is right on the money. And a lot of times, what I want contractors to realize, don't be scared of your accounting. A lot of them are, and I remember that feeling back in the early days. But just, you got to really think about this: is it holds your data, so get good data in there, and it is going to give you reports, analyze it out, which is going to give you the information in the scorecard that you need to continually run your business at top-notch performance. So when you look at it that way, and not an overwhelming system, I think it makes it a little bit easier on everybody.
Definitely.
So again, a couple quick tips that you might have for when we may have some like we said, we're going to talk about some non-QuickBook users. So what do you have out there if you're not on QuickBooks?
There are several apps out there. Really, the biggest thing is you have to make sure that you're even more on top of it, because you have to make sure that you're doing something with your receipts if you're not using an app like QuickBooks. So whether you're using Google Docs and you're making a bunch of files for each job, or whether you're using Dropbox, it doesn't matter. But receipts are super important, and you are going to have to come up with a very, very clear way to keep track of your numbers, whether it's Excel spreadsheets for each job and then Excel spreadsheets for overhead costs. There's a lot of work that would go into that. So I would just say, if that's how you're going to do it well, and make sure you take the time to do it, because it's going to be much harder. Also, and this goes for anybody, whether you're using QuickBooks or not, you have to have separate bank accounts for your personal life and for your business. You don't want those finances crossing over, because if you have an LLC, but you're buying with your personal, then that LLC and the protection that it provides, if somebody would come back and sue you for something, is null and void. Because if the IRS sees that you are purchasing business things on your personal account, then they're not going to pay attention to your LLC anymore. So those are super important. And that goes for anybody, not just QuickBooks user, or not just people who don't use QuickBooks. Make sure that you have some way to get reports, because you need to be able to see how profitable your jobs are or aren't, so that you know whether you need to get better and price better on things. And then also find some software that can help you, whether it's Builder Trend or something like that, so you at least have project management help, maybe CRM help. But my suggestion would be, if you can, get something like QuickBooks. If you don't get QuickBooks, find something that's going to help you have a better chart of accounts and be able to categorize things better.
Bottom line is, whether you're a QuickBook user or using another accounting system, you still got to use the same practices, the same best practices that are out there in accounting principles, and you got to analyze your data the same way.
Yes.
So implementing best practices. So, outline a couple steps you could take. I was going to hit a couple of highlights and you can jump back on them. Staff training. I know I've run into that in companies that they don't have people properly trained up how to do aspects of it. And this one is big, proper accounting practices, and as well as regular financial data updating. So kind of wrap those into a nutshell for us. I think they're in a pretty good order. You got to learn first before you can do it. But what do you see on your end?
Yeah. A lot of it with the staff training comes down to, number one, making sure that your staff knows how to clock in the right way, especially for job costing, because you need their labor tied to a specific job. The other thing that I see a ton with my contractors who have given permission to their staff, their employees, to go buy things, is then those receipts either get lost, or by the time they get turned in, they have no idea which job they were purchasing those materials for. And so in your staff training, make sure that you're telling them, hey, when you take a receipt, you either email it to me right away with a headline, a subject line that says it was for this job, or you write the job directly on the receipt, so that when it gets turned in, we have an idea of what job this material was purchased for. And really, in staff training, those are the two big ones that I see. There's obviously other things that can be specific to different companies, but across the board, those are the two big ones that I see owners struggling with their employees. So then setting up proper accounting, lots of stuff that we already talked about and will continue to talk about. Your chart of accounts is going to be hugely crucial to knowing your numbers correctly, and also then that's going to aid in your job costing. So making sure that you either talk to someone, talk to your CPA, talk to a bookkeeper, something, get a solid chart of accounts going so that you know where that is. Then you got to start setting all your stuff up. You got to set up all your job costing. So make sure that if you're not using a project management system, that you're setting all your jobs up in QuickBooks and setting those up well. You got to standardize your estimating. That is one thing that I've seen change as I work with clients, as they get a set procedure. Okay, every time we get a new client that wants an estimate, these are the steps that we're going to take. And then as soon as we send that estimate out and they agree, then with a couple clicks in QuickBooks, you can change that estimate into an invoice and be able to track payments from that overall invoice. And it's all tied to that same job within QuickBooks, which is amazing. Change orders, you got to keep track of those. Like, there's lots of little steps that go to make sure we're doing all this. Expense approval. This kind of goes back to staff training. If you're going to let your staff buy stuff, you have to decide as a company how much they can do and how you're going to approve all those. And there's lots of little steps that go with that. Make sure your cash flow is the way you need it to be. And that comes down to you staying on top of your WIPs and making sure that if you're a percentage of completion, that you're sending those invoice bills out at the right time for each one of your jobs that you're doing. There's tax compliance that you have to make sure you're in compliance with. There's receipts, kind of like we talked about with your staff. You got to make sure that you have systems in place so that you're getting your receipts where they need to be in a proper time. And then with your regular financial data updating, we've talked about this already, but it is hugely important that you are not letting months go by before you're hopping back into QuickBooks and categorizing your transactions and making sure that those transactions go to the correct job. Because I guarantee you, if you have been out in the field since April and you haven't done very much, you're going to sit down around Thanksgiving when you're finally back in the office, and it's going to be so overwhelming for you, and you're going to have no idea on the stuff that was going on in April and May because too much has happened since then.
No, great points, and that leads into why you got to analyze and understand. It can be overwhelming. First time you get a P&L statement, balance sheet, you look at that. One thing I always tell clients on my end, balance sheet is really meant more for that yearly review. So you don't have to worry about that on a constant basis. P&L, you really want to get a P&L on a monthly basis. And usually it's by the 15th of the following month. So it's already, Monday morning quarterback, you're looking back. But the important that you brought up about getting it in on a regular basis, if you can get your stuff done on a weekly basis, you now, which we're getting into in a little while, you now have job cost snapshots of your projects on a weekly basis. So that's the closest that you can come to really tracking how your company's doing, because there's nothing worse than getting into October and not having that all done, and you hit that October surprise and find out that, wow, I'm not doing as well as I thought I was doing, and actually I burned through my cash, and I'm in big trouble going into the winter months. So you definitely, great points you brought out there, Shannon, and that's hopefully the audience takes that away. That's an important topic. So now we're going to get into the critical role of job costing, which is one of my favorite throughout my entire career, because job costing is the most beneficial report that you can get out of your company on a job-to-job basis to give you trends, financial health, what types of jobs you should be doing and what types of jobs you should not be doing. So we're going to jump into the importance of job costing. This is kind of basics. I'll hit a couple of the points, and then you jump back in on what you'd like to share. But essential for accurate financial management, we talked about that. Helps you identify profitable and non-profitable projects. So important to know where to plan your next job and what you're doing. And it enables bidding and estimating for future projects. So your job costing is the best data you can have for your estimators to actually know how your jobs came out and whether or not they are putting the right amount of labor in, if the materials are figured right. It gives you that whole thing. What are your thoughts on that?
My thought is, if you don't have accurate job costing, it's going to be like you just said, you're going to hit October and your business is not going to be where you thought it was, and you're going to be in serious trouble. And the only way that you're going to know which jobs caused that serious trouble is if you're job costing.
Very true. So like we said, don't look at this as a painful process. Look at this as getting data out. If you get if you get a bad project, that doesn't mean the work you're at the end of your ropes. That means you've got information to do better on the next one and at least know where you did. But if you don't have that financial benchmark, you're going to have no idea where you need to improve.
Yeah.
So job costing in QuickBooks, I'm going to turn this right over to you. This is your categories here.
Yes, definitely. So I love how QuickBooks integrates with things like Buildertrend and Procore. So your jobs are coming straight across to QuickBooks and you can do this. And really, if you're staying on top on a weekly basis, like you said, John, it's going to be pretty much real time that you're going to know how this job is doing. Granted, if your percentage of completion for your billing, you might not know until you get some money in, but you're at least going to have an idea compared to the estimate that you sent out, how you're doing on cost and how much time your employees are taking to get these kinds of things done. It's fabulous how QuickBooks integrates and can help you track a whole lot of that and make it easier on you. One thing I love about QuickBooks is that middle point, that while you're going through and categorizing your expenses and your income, in there in that bank feed, which if you don't know what a bank feed is, holler at me because we need to do some chatting. But in your bank feed, while you're categorizing to the chart of accounts, your expenses and your income, you can pick the job that they go to. So for example, you have a debit card and you went and spent several different small amounts at Menards for this specific job. You should have receipts for those, but then when you go through your bank feed for those Menards purchases, you're going to put it to the correct COGS account, which is costs of goods sold, and then you're also going to tie it to the job. And the reason that's so important is so many times those little things add up if you're not keeping track of them. And so while you're categorizing, it's hugely important that you're tying them to the specific job that they do. And then once you do that, QuickBooks provides amazing reporting. So you can just go to the jobs tab on the left-hand side, click the job that you want to see. And from that, you can see all the labor that's there. You can see all the expenses. You can see the income that you have received already. And then there's a little button and you can click see a profit and loss so that you can see at this point where your job is and how it's looking with the income that you received and the expenses that you had. Granted, at the beginning, your profit and loss might not look very good, especially if you don't take a down payment. But as it goes and you start getting payments from your clients, you will have a great idea of how it's going. And this is a huge overview, I understand, because I can't get into all the tiny little details. But if you are categorizing things and adding them to the jobs, you will have a very accurate view of your job once it's finally done.
No, great points. Job costing is going to tell you exactly where you stand and how you compare it to estimate and until you get money. And that's a cash flow issue. So it's kind of two separate items for sure, but you can't do one without the other.
Correct.
And so, case studies, and I know we got a lot to go over where we're actually trying to move along here. But on a case studies, is there any like job costing? I'm sure you must have had companies that didn't do job costing. You got them on job costing, and they must have had. What's an enlightening moment you can share with us from one of your previous clients?
There was one who had no idea, like he wasn't even necessarily keeping track of his expenses, had no idea where he was. Started working with me, we started getting job costing going, and all of a sudden he's realizing that he needed to change his I just totally like change the amount of money that he's billing out for specific jobs, and also realizing that maybe some of these jobs that I was taking wasn't the best idea for my business. And so because of that, he started doing tweaking and was able to greatly grow his business. It's doing so much better now. And it sounds really cliche, but I really feel like taking the time to actually start doing job costing opens your eyes to so many other things in your business that you weren't necessarily aware of, especially for this guy and lots of my other clients too. But specifically this one, because now he's doing so much better. He's getting more clientele. He's getting bigger contracts because he's doing a better job. And his clients that he has worked with are happy and are telling other people about him. So
Excellent. And you don't know what you don't know until you learn. So that's why you got to do this.
yep.
So common mistakes to avoid. We can probably go through this one pretty quick, right? You got to overlook small expenses. You're overlooking them, they add up, then all of a sudden they're not categorized right. And you thought you made money and your job costing isn't right because it's not accounted for. We talked about this, failing to update the job costing regularly. I like to see it on a weekly basis. I realize that's hard for smaller contractors sometimes, but if you can get into somebody to do that, you will get so much better data. And then this was a great one, not aligning job costing reports with business goals. So again, I think that's the one you can give us a little tip on there, because how do you align a job cost report with your goals?
Yeah, so it's like that job costing report. Like I said, for the guy that I was working with, he had no idea that these little jobs that he was doing was not making him any money. If anything, it was making him go negative. So if you have goals to grow your business and to see it thrive, you have to know which jobs you need to be doing and which jobs you shouldn't be doing. And job costing is the only way you're going to know that.
That's a great point. Remember, you're not here to do more jobs. You're here to make more money. So sometimes less is best, and you won't know that if you don't have reporting.
Yes.
So construction accounting versus regular accounting. This I know is a confusing topic, but I think you're going to simplify it very easy for our audience. So, going to give us what different key differences. Sum it up for us.
Yeah, definitely. So, construction accounting, your business is based on projects. Your income is based on a project being complete or percentage of it being complete. And so when you compare that to a regular business is either selling a service or a product, and their income it might be something like this, but it's not based on something getting done a long time down the road. And so the difference between construction and regular is that you are project based for everything. And so it makes a huge difference in how you do it, and job costing is a huge part of that. And so if you have a construction business and you're not doing job costing, then you're really not getting the benefit of accounting at all in your construction business. Obviously, most construction projects are not just a week. I'm not saying that they're all not that way, but for the most part, it's going to be at least several months, if not longer than that. And so this again comes down to what we were talking about with our cash flow problems. If you're not on top of things and paying attention, since you're project based, you're not going to know that you hit a percentage that you need to bill someone if you're not paying attention to your WIPs and all that stuff. And so there's a huge difference. Your revenue is based on you staying on top of it and sending out invoices when you've hit that certain percentage. A regular person who's doing regular accounting, they're sending out invoices as soon as someone wants their service or has bought their item. And so theirs is not keeping track of something. Theirs is just sending it out as soon as something is purchased, or sending it out so something can be purchased. And it's very different, and it can be complicated, but at the same time, it doesn't have to be. If you have questions, please ask me. I would love to answer them. But at the same time, if you start doing it, I guarantee you that the more you do it, the more it's going to make sense to you.
It will, and it's almost impossible to run a construction business correctly without job costing. You're kind of running with the blindfolds on. Correct. So, cash and accrual accounting. I know I get a lot of questions on that, a real lot, and it's pretty simple. And I think you can give us that quick overview between the two, so it makes the most sense. But it's really, I think most contractors do start out as cash, yes, and then they work their way into accrual. So, give a quick analysis of what that's about.
Sure. So when you do cash accounting, well, here, start over. The difference between cash and accrual is the difference when a transaction is recorded in your accounting software. So for cash, you're taking money in and it is credited to your accounting software when you take that cash in. So I'm going to use an example that I am going to buy something this week, and that expense is going to happen this week because I sent money out to buy it. But if someone bought my services and I sent them an invoice for an amount due, but they don't pay me until December 2nd, I don't mark that income down for my business in cash until December 2nd, even though I started that service for them in November. And so it just pushes your money back a little bit, but it's so much more simple because it's just one transaction. I don't mark the invoice. I just mark when my cash came into my business. Whereas accrual, you mark your income when you send the invoice out. And it's double entry accounting, which means you send an invoice out and the accounting software is going to send that invoice to accounts receivable. And it will sit there until that client pays the money, and then it moves it from accounts receivable to your income account. And so everything that you do has a two-step process. And so it's much more complicated, but it makes your numbers so much clearer. I do want to say with cash accounting, it is okay for smaller businesses. Just know that it is not GAAP approved. So definitely as you start growing and you are making a profit, make sure that you're switching over to accrual, because accrual is GAAP approved and is a great way. You're also going to see a huge change in numbers if you run your reports as cash versus running your numbers as accrual. Accrual is a much more accurate view of your financial health than cash is.
Yeah, I think it's almost essential if you got projects that are going to run from one month to another month, you've got to be on accrual accounting at that point.
Did that
But
make sense, or should I try to explain it a different way?
no, I think you explained it exactly correct. And also, we don't have time for that today, but the tax implications of a cash accounting can cost you a lot at the end, depending on when your money's coming in. So interesting. But you will get on accrual as you grow. But that's always what I recommend my clients. If you got projects that are lasting more than a month, you really have to be on it to get the benefits out of it. So some industry specific challenges. I'm going to whip through this a little bit because we got a lot to go through. So construction accounting deals, with unique challenges like job costing, percentage of completion accounting, fluctuating material costs. They require specialized knowledge of construction contracts and billings. And that's what we just give you basics. That's what we just talked about. That's why when you get into this, you're jumping from that cash over to accrual accounting and understanding your job costing in your different ways. Construction is just a different little beast among the world of selling. And so this is a good one for you here, adapting accounting practices, right? So what do you got for us? Tips on this one. What's best practices?
Best practices is do your research. If you don't want to take my word for it on QuickBooks Online, do your research and find something that is going to have reporting and is going to be able to job cost for you. Because if you don't, then it's going to be much harder for you to do. You do want something that's going to integrate with your different project management, or if you don't use QuickBooks Time with your way that your employees clock in, there's lots of things. You want to make sure if you're not using QuickBooks that whatever software you use is going to integrate with all that, or whatever your payroll software is, that it's going to integrate with your time management for your employees, because everything that you can do to integrate things is going to save that many steps and that much time for you.
Yeah, but this is where staff training comes in. You talked about earlier. If you have somebody in your bookkeeping, or if you're doing it as a business owner and you're really not familiar with the construction aspect of that, you need to take some classes. You need to learn, or you need to reach out to Shannon and get that expert advice. And again, this is a revolutionary as it sounds. It's pretty simple. Assigning costs to specific jobs, and you did touch on this a little bit earlier as far as how easy it is with the banking, but what's important on what do you see on categorizing those costs?
I think I've said it already, but your chart of accounts is hugely important to your being able to say whether a cost is direct to a job and it's actually a cost of goods sold, or whether it's an indirect cost, which I think we talk about a little bit later too, but admin employees would be an indirect cost to your business. And so you need to make sure that you are categorizing all those well. The great thing is in QuickBooks, at least when you are in your banking feed and you're categorizing all those transactions, you're picking the chart of accounts account that these are all going to go to, which helps all of this. And then you're picking the job. And seriously, it is 3 drop downs. You pick the vendor or the payee that this transaction was for, or 2, you pick the chart of accounts that it's supposed to go to. And then the next drop down over is the job or the class. And it's just a drop down. You can either start typing in the job that it's for, or you can click the drop down and scroll through it to find what it needs. And seriously, that's how easy it is in QuickBooks to make sure that your cost is number one, going to the right category in your chart of accounts so that your balance sheet looks good, but then also that all of these expenses and income are going to the correct job so that your job costing is accurate.
For me, on the opposite side of running it, I will tell you, pro tip, you see, you got to have labor, you got to track your materials, your subs, your equipment, your rentals, so forth. But I see a lot of contractors want to get that material down to every screw and nail on job costing. I will tell you, pro tip, it's not going to work. People aren't going to put it in right. Something's going to go wrong. Worry about what your budgeted material is compared to what your actual materials are. Then if you're over, then you can go and drill down later. But if you try to do it on a job cost report, it's going to look like a declaration of costing that you're never going to be able to keep up with.
Right. And to tell you the truth, in some ways, those can be overhead costs too, like screws. Yeah. You don't have to keep track of each one for every job.
Right. And this is more detailed. We just actually covered this, but we just went over and tracking your labor, materials, and your other costs. Again, permit costs, subcontract fees, equipment rentals, you want transportation. We forget about that. Expenses, basically whatever is used on the job or for the job goes into job costing. Anything that doesn't pertain to a job, usually consider your indirects or overhead costs. So that's just my rule of thumb. It's worked really well. I know, and Shannon, I know you set your clients up that way. So talk a little bit about how you can use subcontractors, in the system, how that works.
So one great thing about QuickBooks is you can set subcontractors up as vendors in QuickBooks, and you can pay them direct deposit from your QuickBooks payroll section. So even if you don't have employees, you can set it up to be able to pay contractors that way, which is fabulous. They can also do the same kind of login and clock in QuickBooks time, even though they're subcontractors, especially if you're paying a specific contractor by the hour that they do instead of the job. They can still use your QuickBooks time and it will all show up for them within QuickBooks. Really, it is super important that you have contracts set up with subcontractors so that they're getting their bills to you quickly and in a timely manner, because if they don't and you're a percentage of completion contract with your client, if you're not getting bills from the subcontractors, then you can't be passing that on in a timely manner to your clients so that you're getting the money back. It's just a big circle of things that need to be done. But the more accurately and the quicker that you can get information from your subcontractors, the better you're going to be if you're a GC or something like that.
Nice. Very makes it easy. Job profitability analysis, right? And what we're talking about here is analyzing the profitability of each job compared to allocated costs against it. And you're going to use this to make informed decisions. So I'm going to kind of hit this from my end because this is more, strategic as far as looking at. So if you're an owner or you're a manager within the company and you're responsible for a project, this is going to be your scorecard. So like I said, this is why you want to have your good, as Shannon said, get those good practices in early to get your costs in, because you want to know how your job is working out, because you're going to have good jobs and bad jobs, but the goal is to have way more good jobs and bad jobs. And this is the way you can keep up with it. So you want to get used to looking at these honestly on a weekly basis. If you're getting the costs in by Friday, then you want to take a look at your reports on Monday to see where you're at. And that's the best practice for doing that. And then now we'll get into the cost allocation and identification and tracking inventory material. So this is interesting. I with QuickBooks and that. So I guess what we're saying here is you can track, as you grow, you may have inventory besides just tracking material. So bring us up to speed on that one.
Yeah, so QuickBooks is amazing in the fact that it can track inventory and can keep track of those things, especially then as that inventory hits your invoices that you're sending out, it's going to automatically take away from the inventory that is stated in your system that you put in initially. The great part is QuickBooks is a first in, first out. I don't know if everybody's familiar with that, but basically what you paid for your first piece of inventory is the first piece that's going to go out, and that's the price that it's going to go out as. So then you add more inventory and it's a different price. Once you finish using up the first amount, then it's going to change the price to the second amount that you purchased. It's not necessarily the smoothest inventory tracking system, but it has some great ways to do it in there. If you have a ton of inventory, I highly suggest that you do some research and find a super in-depth inventory tracking system that can work with QuickBooks. But if you're just keeping little amounts, QuickBooks is all that you're going to need to be able to do that. With that, you have to regularly update the inventory that you have to make sure that what you have in your storeroom is what QuickBooks says. At the absolute outmost, check every month. My suggestion would be at least twice a month, because you never know when things are going to slip out that didn't get caught. And so you need to be making sure that you're checking your inventory and updating it to reflect what's all there.
Absolutely. And you want to always account, make sure it's charged to the job, because you don't want to eat it in overhead, because it's going to give you an inflated number and it'll affect your bidding and your competitiveness in the market. So labor and overhead costs. So labor, you're tracking your employee hours per project, assigning those costs, rates, and salaries. That's pretty basic, easy to understand. And then overhead. So hit a little bit on the overhead allocation. How does that work on your job costing?
Yep. So there's two different ways that you can do it, really. You can do it that you figure up what all of your overhead costs are and put a percentage of it on each one of your job costing, or each one of your jobs, so that you have some of that taken care of. Another way to do it is just count it as overhead, and it's going to show up on your business overall profit and loss in your balance sheet. So some companies that I work with do want to put a percentage on their job, that each job that they do, so that is covered. And some people just want it to be the actual specific job with the labor of the guys that are in the field doing it and the materials that are used, compared to the income that comes in, and then just have a whole lot of overhead that they figure in the whole picture of their business.
That's good. I think either way works. But I think one important things on this is to actually know what your overhead percentage is for sure, so that when you get your job cost, if you're not putting on each individual job cost, you're going to at least be able to look at your gross profit on that job, mentally subtract off your percentage of your overhead, and you're going to know what your true net dollars are. So what you got to learn how to track those things, and because it's important. You got to know you make gross profit. You have to have, but you got to have some of that black at the bottom left over, or you've done this for nothing. So using QuickBooks for allocation, we're going to get into the slides on that, which we're going to talk about utilizing the features to assign job costs, class tracking, customer features, regular review, job costs for QuickBooks. I think we're getting on the next slide, but if not, I'll stop there and you can kick back on this, Shannon. I think, yeah, so getting into that compared to a case study. So what do you see? What have you seen on that? And I'll kick back to that slide just so you have those in front of you when you're considering about your client there.
Yeah, so honestly, I just talked to somebody I don't know, a couple weeks ago, and I was asking them in our initial conversation what their revenue was, what their profit was, and he had no idea. And so I can guarantee you, if he had no idea in the overall scope of his business what his revenue was versus what his profit was, there's no idea he knows how profitable his jobs were. So I realized that this is a bit of a downer story, and we in the process of talking about me taking him on as a client so that I can help him get these things in order. But just know, if that is you, it's okay. And you can take this information and start implementing it in your own business and be able to know what your revenue is versus what your profit is, not only for your whole business, but also for each job, so that you have an idea. And all of this comes down to all these steps that we talked about. You have to categorize things correctly. You have to tie everything to a job. And then you have to decide, am I going to do overhead costs, or am I going to put a percentage of that onto each job that I do? And that's one of the joys for me. I love numbers. I love being able to help a client get to where they know all of these numbers.
No, that's great. And like you say, don't be afraid to ask for help, because you can't correct what if you don't ask for help, and you need to. So we're going to cover now in this section, there's some additional factors in job costing and profitability. We're going to pick up the pace just a little bit because we're coming down our last 15 minutes. I knew we were going to have a lot to cover today, and I want to leave some time at the end. We'll go over if we need to make sure you get your questions asked. So receipt management, we kind of talked about this a little bit. So I think this is probably a pretty good summary. you're doing that. You have to have it for your job costing and also tax purposes at the end of the year, which it's going to get real busy for you here shortly. And you got to have implement a system for organizing and storing receipts digitally. I like the tip that you gave as far as being able to put that into your app and get it in. Anything else to add to that, or does this pretty well sum this up?
Sums it up. Just know that as a business owner, you are required to have those receipts, and you are required to make a way to have them be organized and saved. So you can either have somebody help you do that or just implement processes, but make sure that you save all your receipts so that, Lord willing, it doesn't happen, you ever get audited, you have those receipts, because it's not going to go well if you don't.
That's for sure. Uncle Sam wants his cut. And then job deposits. I mean, we talked about this a little bit earlier. So if you kind of, I think it's good to, what is the importance of job deposits in managing cash flow and then tying that into financial planning for projects?
So obviously a job deposit is going to majorly help your cash flow. It builds faith between you and your client because they are saying, hey, this is really what I want to do and I want you to do it. It also can help you prioritize jobs. Say you've sent out a couple estimates and only one person gets a job deposit back to you. Well, obviously that's the first job that you're going to start with. And so it makes things much easier for you as a business owner on the construction side, that you have some money up front for a lot of those initial costs. And it also helps the client be super committed to what they're doing. And it, just like what I said, it helps you manage your cash flow. And great thing with QuickBooks is when you send out that full invoice of what everything's going to look like, when you receive a payment, you mark this payment, and then in that invoice will keep track of how much else is due for what you sent out. Obviously, it's going to change with change orders, but it still keeps track of everything that has been paid, so you have an idea of what has come in. I feel like, oh, the other thing I was going to say with this, talk to your CPA, because some CPAs require that you make a job deposit categorized as a liability because you're taking this money without using it yet. So please talk to your CPA, because everybody that files taxes has a different view on it. So make sure that how you are categorizing those job deposits is how your CPA is asking you to do it.
That's an excellent pro tip that keeps you out of trouble with the IRS, for sure. Avoiding payment problems, right? Clear payment terms and contracts and timely invoicing. You'll have timely invoicing if you're doing everything correctly that Shannon's been going over here, but make sure you understand the payment terms in your contract. A lot of times contractors are very fortunate. It's your payment terms. You're going with the owner, but once, especially when you move from that residential world into the commercial world, you're getting someone else's contract, and you got to make sure you read it and understand it, or you will create a lot of cash flow problems because you need to make sure you have enough cash to carry you through the project so you get paid. Some strategies for managing client payments, such as milestone-based billing or penalties for late payments. You can set those up in QuickBooks, correct? You can have your interest payments and all that in there.
And you can set it up automatically so you don't have to keep track of it.
Excellent. So just make sure you do understand what you're actually getting yourself into, and your payment terms match what your cash flow actually is, because you're someone's bank until you get your first payment. And offering financial solutions. So we talked about this prior to coming into this webinar. We did, and I know you can set these up on your QuickBooks. But really what this is in a nutshell is you get paid from a finance company while your client gets to make payments. So in your experience, do you have quite a few of your clients that are working with third-party applicators to get that in?
I don't.
Okay, on my end, I've run into that quite a bit. So I can tell you that is a pretty good option for you to look at as a contractor. There are companies out there that specialize in working with small contractors, and basically what it does, it takes the float away. They'll go in pre-credit check your client. If they're credit worthy, it's just like they may get payments over 2 months, 3 months, 6 months, whatever it is, but you're getting your money immediately. So as soon as you do the work, you're getting paid. And again, this can all be kept track in QuickBooks, correct?
Yeah, and then you're not liable because you have the money and you're not the one having to go after it.
Absolutely. Sometimes it's a great solution.
Yeah.
Understanding and utilizing reports. This is probably my favorite section because this is where you're going to get your information out. So, essential financial reports. How do you work with clients in teaching them how to use these reports?
Oh man, I don't think we have time to go into all that.
Give us that 2-minute overview.
Basically, your profit and loss statements are for each job. That's where your job costing comes in so that you can see what you estimated and what you were supposing that you're going to spend for each one of these, as well as what you're going to receive. But then you also need a profit and loss for your whole business, especially if you're not putting overhead into each job. And so basically, they're super easy to understand. Your income, at least the profit and loss, your income is at the top. All of your expenses are going to be underneath. And then that bottom number is either going to be red or black, depending on how much income you have, and then comparing that, taking away then all of your expenses. And so that one probably is the easiest report to understand in all of these. A balance sheet is your overall view of your entire company, your assets, your liabilities, your income, your expenses, all show up in a very broad view on a balance sheet. That is a very high overview of what it is, but in the basics, that's what a balance sheet. Your cash flow statement is super critical if you are accrual accounting. The reason is, in accrual accounting, you're not necessarily knowing how much money is coming and going in a certain month. And so when you pull a cash flow statement, it's saying in this set of time when we pulled the report, this much went out from this account and this much came into this account of actual money moving. And so every number that you look at is just either money in or money out in each account in your chart of accounts.
No, it's excellent. Excellent overview. Balance sheet, really your bankers and your bonders, and that's how they know if you're equity worthy of moving, growing in bigger. But I'd say at all these, a cash flow statement should be what you're using on a bi-weekly basis, and along with your job cost reports. You did a great job summing that up in a short period of time. So custom reports. So on this one, I'm going to just ask you what do your clients ask you for as far as custom reporting? What are some that they look for?
A lot of it is they're wanting the profit and loss for each job. And it's super easy to get. You can go into profit and loss by class or profit and loss by job from the reporting section of QuickBooks. Then you click the time frame that you want, and then there's this great little button that says customize, and you can go pick it by job. You can pick it by materials. Like, you can pick a report by whatever you want. A lot of my clients want job costing for each job that they're doing so that they have an idea of where their money is for each one of their jobs. And usually it's monthly, not always, but usually it's monthly that we're doing something like that.
Sure. And then, what I always tell my clients that I work with on the operational side and learn to run your businesses and growing your business is you're going to come across where you're going to want a specific report, because it's going to check, maybe history of jobs to current jobs, whatever that may be, you can pull. And as you said, Shannon, it's pretty easy to go in and create these reports. And that's where you need to be an expert in QuickBooks to do that. That's for sure. But that's where you would come in. I'll give you the ideas and you create them.
The other one I just realized is the accounts receivable aging summary is another one that we pull quite often, and that people are going to want to know, because it's really important to know how quickly your clients are paying or how far out it's been since they have paid you and you have an invoice sitting out there. QuickBooks has a marvelous little feature that you can automatically send reminders to someone who hasn't paid their invoice yet. But the AR aging summary is something that we pull pretty often too.
And then analyzing reports for decision making, right? How do you interpret financial reports to make these decisions, and using report data to identify trends? I think this in a summary is the report is exactly that. It's just a report. You have to learn how to read these reports, and you have to know what the trends are in your business. That is an entire separate webinar that we could do in training. But bottom line is, if you want to make X amount of dollars, and that's your budgeted goal that you've set up, and you've done your budget, what you should be doing yearly to make sure you're going to be profitable. How are you tracking? How are you tracking on a monthly basis, a quarterly basis, midterm, and then finally when you get to the end? And then also too, manage risk. Well, if you look at your job cost reports, that's an easy way to manage risk, because that's going to tell you when you should and should not be getting in to certain types of projects. So again, you can use it for that. Do you have customers or clients that are using these for those type of reasons?
Yeah. I mean, you want to run a business and run it well, you have to be making sure that you're managing your risk and that you are
Yeah.
aware of. And this is when a balance sheet, you wouldn't want to wait till the end of the year to look at a balance sheet, because if you're trying to figure out if this risk is worth taking, your balance sheet really is what you're going to want to look at so that you have a good idea of where your business is standing overall.
Excellent. Then we're to questions. So we got through this. There was a lot here. Want everybody to understand that we weren't here representing QuickBooks, but like I said, since 65% or more of contractors are on that, it was important to understand you could do this, because I get a lot of questions, and that's how Shannon and I got together, because she's the expert as far as using the QuickBooks for from the accounting side and understanding it. And my field is as the contracting side. But the biggest problem is most people don't understand that this is robust enough to do what needs to be done. I do have a question that came through, Shannon. I think it's a great question. This goes back to your, I believe this came in right after your AR report. So this question is, what should I be looking for? My report comes out, I have current, I've got 30, I've got 60 to 90 and over 90. Where should my money be? What are like some strategy points to look at? Like, how much percentage of your money, where's a danger point? Like, where should your money be in that, say, current to 90, over 90 percentage wise?
Oh, personally, I want them all current. That's not how it works. I obviously the 30 days over isn't as big of a deal. Once you're getting over that, then you have got to be doing something, because that's majorly affecting your cash flow. And so you get to that 60 to 90 and 90 and over, and you need to be doing some serious talking to the construction company's clients, because you don't want that kind of cash flow halting in your system.
Yeah, just the only thing I can add to that is, if you're a contractor and you're working direct and you're probably a million under, then honestly, you shouldn't have anything over 30. You should be making sure you're getting your payments on time. But what happens is, as they grow, I run into this, especially when contractors get above $10 million, they've got so much work going on. There could be delays or payment processes, whatever it may be. But honestly, rule of thumb is over 90, other than retainage, because you're going to get into retainage when you get to become a larger contractor, 2% or less of your money should be in that over 90. If it's greater than that, you've got some major problems in your processes. And then that 60 to 90, I never like to see that bigger than 10, 15%, because, we're talking about on the wide range of 15 plus $1 million client, contractor. And really, you want the bulk of your money still to be, usually by that time, you're not going to get paid under 30. It's usually 30 to 45-day payment terms. So that's where you want to make sure that the bulk of your money is turning over in that 30 to 60-day range, is cleaned up. And that's just my offering for those larger contractors. So between that but I do agree, I want my money today, yesterday, if I could get it, for sure. Another question that came in on job costing, get here, is I don't currently do job costing, which is a lot of companies don't. What's the best way for me to start?
Yeah, it's really hard to go back and predate job costing. So my suggestion is, as you're getting new jobs, new estimates that you're sitting out, start setting those up with job costing. Set your estimating up in QuickBooks, like the estimate that you send out, set it up in QuickBooks as a job. And then if they agree and sign a contract, the invoice then is switched over within QuickBooks as a job. And so is it doable to go back and job cost? Yes, it is a lot of work. And so my suggestion for people is, let's just start where you are now. Start making your estimates and then go forward from there, that your job costing everything. And it's also going to be a bit of work because you're going to have to retrain some of your employees. You have to clock in on a job, and you have to purchase things and make sure you're marking it for a job. So start doing some of those things now with your employees so they get used to it. And then as you're sending out new contracts to new clients, start job costing those instead of trying to go back and figure things out.
No, that's fantastic advice, because honestly, before that, you might as well just take a look at your P&L and you'll know where you were at the end. And then the only thing I can add to that is you should be estimating the same way you want a job cost. So don't try to just do lump sum estimating where you're not breaking out your materials and that. If you want a job cost them, you need to know what's different, not just square footed and hope your price is there. You should get into that same practice. So that brings us down to the very end. I want to thank everybody for attending today, and this will be available on replay. We have a lot of people who registered and wanted to make sure it was available on replay because, of course, with our busy schedules, we all can't always make these times when they need to be. But Emma, tell them a little bit how, Shannon, how do they contact you at Emma Creek Bookkeeping? I got your information here. Is email the best?
Yep. Shoot me an email. Honestly, once that initial step is taken, a phone call is easiest for me because then I can actually sit down and ask you questions without then typing emails back and forth all the time. And usually it's 30 minutes or less. It's not a big deal. And then from there, we take steps. If you're interested in working with me, great. If not, then we had an initial conversation and we can move on.
That sounds great. And you can reach out to me. You can get it info@cotneyconsulting.com. Again, I'm always happy to talk to anybody in the contracting world. No obligation, to kind of give you some pointers and tips to move you along. And I'm super excited to now have Shannon as a resource for my clients, and I'm happy to be a resource for Shannon's clients moving forward. So with that being said, I want to thank everybody for attending today, and we'll catch you on the next one. And thank you very much.
Thank you, John.
Bye now.
Bye.